When it rains, it pours, and Gemini and Genesis have been in the news quite a bit lately, but not for this. This is new. The SEC wants to get in the act and says that the yield product that Gemini was offering by way of Genesis, called Gemini Earn, was an unregistered securities offering. Now, this is in keeping with past actions the SEC has taken against BlockFi and others. We're going to take a nice little look at a video that the SEC tweeted out from Gary Gensler. Let's check it out. Roll the tape.
Platforms that offer crypto lending need to comply nonetheless. This helps protect investors. It increases trust in our markets. Getting these platforms to comply with the securities laws will benefit investors and the crypto market. As with seatbelts in cars, we need to ensure that investor protection comes standard in the crypto market.
Cool metaphor, old video. That's a rerun, I'm pretty sure, from the BlockFi settlement. So they're out there just rehashing old content for the sake of clicks over on twitter.com. Hats off to you, content creator Gary. That's some good stuff. Anyway, this is definitely a continuation of the SEC's stance on what these yield products from centralized finance crypto companies amount to. They amount to unregistered securities offering. They're not like interest as would be dictated by a banking relationship in the normal terms. They are a securities offering that didn't go through its due diligence in terms of getting the necessary approvals to be rolled out to customers, many of whom are resale customers in the instance of Gemini Earn. And now I mentioned all the other stuff that's going on with Gemini and Genesis, an escalating war of words between Gemini, Genesis, and Genesis parent company Digital Currency Group, which, disclosure, is also the parent company of CoinDesk. That's a whole nother thing, but we're going to talk about the SEC action as it was dropped yesterday. I'm going to put Will on the spot for this one. SEC, Gemini, Genesis. What's your take on this one? This is a whole new chapter in the Gemini-Genesis feud.
There is a lot going on here. And Zach, I kind of want to fact check you. I'm not sure if you're quite right. I think there was a little change in the language in that video because he did call back to BlockFi and the enforcement action there. But I think like 90% of that video was old. I think they just like substituted a little bit in there. So yes, hats off to Gary Gensler for reusing content. It's the cheapest way to do it. But let's talk about the Winklevi and their reaction to what happened yesterday. So we have Genesis and Gemini feuding publicly on Twitter. We have Barry Silbert and the Winklevi twins going at each other in front of everyone. It's been great and spectacular to watch, unless you have funds on Gemini Earn, that is, of course. But we have a nice tweet from Tyler Winklevoss yesterday saying, quote, "It's disappointing that the SEC chose to file an action today as Gemini and other creditors are working hard together to recover funds. This action does nothing to further our efforts and help Earn users get their assets back. Their behavior is totally counterproductive." He goes on in his tweet to say that the SEC did not even give notice to Gemini or Genesis before filing here. In fact, they just sent out a press release, issued some tweets, put up this cute little video, and let the wreckage start on Twitter. And that's a pretty tough place if you're in Gemini or Genesis seats, right? Like they're already dealing with very angry customers. They're already dealing with huge holes and losses in their balance sheets. And then Gary Gensler comes up from the top ropes and hits them with the steel chair. It's a very unfair and it's pretty spectacular to watch. We saw a lot of people on crypto Twitter jump into this and be like, what is up, Gary? Like you could have had an enforcement action months ago on this, years ago at this point, and you come in at the last moment when the Gemini Earn program has actually been offline for 2 months. That's when you're going to do enforcement action. It seems like an odd escalation. Zach, I'm going to throw it back up to you, but definitely want to get Adam's take on this story.
Yeah, all credit to Hasib from Dragonfly, a venture capital investor in the space, who tweeted that the comedic timing here by the SEC is just chef's kiss, perfect. And I think that to me is the thing that is probably the funniest thing. Okay, Gemini Genesis are in the headlines, and now SEC acts on an entirely different matter after withdrawals have been frozen for more than 2 months. It's pretty crazy to see it come down at this point in time, maybe simply because they were in the headlines for other stuff, but who knows. Adam, tossing it to you.
Yeah, I think the old saw is applicable here, which is, this is the SEC closing the barn door after the horses, are long gone at this point. To the extent that they were going to do something, there were plenty of opportunities to. Gemini is claiming that they've been in talks essentially, with the SEC for the last 17 months. And so again, like the choice to make this now does seem like, as Tyler Winklevoss says, that it's optimizing for political points. That feels like that's a very correct read to me. And I think it's one of the broad frustrations that many of us who have been in the crypto industry for a long time have had, which is that it's not like companies, especially those based out of the US, want to do things in a way that's kind of gray zone, shady, whatever. It's that the rules that are applied to these types of things don't fit. Zach, you opened this piece kind of talking about how this is different than, giving your money to a bank and then the bank paying you interest. I don't actually think it is. Like, legally, it may be different, but in practice, it's the same thing that's happening. The only thing that's different here is that the U.S., the federal government doesn't have an FDIC equivalent that covers these types of things for crypto products, where they do for the banking system. But that's really the only difference. You're giving your money to somebody who's going to make money for themselves by lending it to somebody else or using it in some way, and then they're going to pay you some of the money that they earn off of it. That is exactly what banks are supposed to do, except, of course, in the modern era, banks don't pay any interest at all, but they still do that with your money. So, I mean, like, it's just another example of, like, when people looked at Gary Gensler coming into this, they said, oh, this is a regulator who knows how to do this right because he understands the space. He has a history of teaching about this, and he has a nuanced understanding. And I was very skeptical, and I think my skepticism has been proven out. His knowledge of the space just means he knows exactly the place to stick the knife. And I think we continue to see that. They're doing everything they can to help themselves and really to hurt everybody else who's involved. Jen, you've got the last word on this one.
Doesn't anyone else feel like we have deja vu here? Didn't this happen with Coinbase? They were working with the SEC. They were going to launch their Earn program, and then the SEC, who they were working with, who they were talking to the entire time, came around and either sued or threatened to sue them on that Earn program, and then they had to roll it back. You would think that when that happened, the SEC would start looking around for other similar programs and say, actually, you know what? We're going to apply what we learned and what we were trying to enforce in Coinbase in all of these other programs, and they didn't do that. So I agree with everyone on this panel that this is completely opportunistic for the SEC. Secondly, is Gary Gensler trying to be an influencer? I think I saw him use the hashtag #glowup yesterday, which was crazy for me. And these videos are also a little bit cringe. I would love them to take the money that they are spending on this like educational content, which includes Gary Gensler's salary and participating in this content, and put it towards creating frameworks that the industry can work within so that we don't need these cringeworthy explanations as to why you are out here enforcing and trying to create precedent by enforcement. We can just operate within the framework you set because that is your job. And that is my take on that story. I saw someone's hand go up, but I don't know whose.
It was mine.
I mean,
I'll
it's
go
just like
really quick.
Yeah, you got it.
Just, I want to bring up Jen's point one more time. I think it bears worth repeating. Coinbase started building a product like this as well, and the SEC shut it down. But Coinbase's product was actually built on DeFi protocols. So you had sustainable yield through a transparent portal with Compound. Here we have Gemini and Genesis lending this out to Three Arrows Capital, which was just degen traders out in Singapore throwing money at the wall, and that blew up. It's funny to see the different enforcement actions here.